Welcome back to the Market Wolf. I am the Market Wolf, where I give you the best bear case, the best bull case, and my opinion. And was it a doozy of a day today? Boy, did the bull case play out, and I warned you about it yesterday, and boy, did it play out way more than I expected. But if you're going to overextend yourself, that's typically what will happen in a bear market, so I should have anticipated that. I think I said for my bull case about roughly 402.02, where we'd start flagging out. And then I anticipated some more climb. Yeah, I thought we were going to have a steady climb up, get the good volume, that kind of stuff, really build structure. That's what you do when you're trying to actually make a comeback. Not what happened today. We did push pretty high, and it's not that we can't hit an accumulation zone and do well. In fact, we have. We have flagged out, like I said, that we would on Webull. We're currently sitting at $505, and we made it all the way up to 407.09 today on that handle. And remember, I brought this fib line up here, this blue fib circle. I warned you about this. I told you this could be a massive W reversal and that we could ride that blue fib line up. I warned you about how bullish we were becoming yesterday when we had to take that case seriously, and it played out. Now, I also gave you my opinion yesterday, and I'm going to get to my opinion for today and the best bear and bull case very soon. I want to walk you through what is happening in the market on these charts in the 30-minute, okay? The best bull case. It's trying to get, well, actually it's not trying. It actually did go total bull on the EMA lines. Our EMA lines are completely straightened out now, back to a full bull case. Our price is fully supported by all of the EMA lines. They have straightened themselves out 20 to 200. So that is definitely bullish on that 30-minute time frame. And, we're supported at about 404.52, like I said. Now, the bear case in the 30 minutes is that we are way overbought and we have started to cool off, and momentum is beginning to slow down. Now, those, that can cool down just by flagging out. That doesn't have to go down, so that's something we have to keep in mind as we go forward looking at this case as we think about tomorrow. So, on the 1 hour, let's go to the 1 hour. And on the 1 hour, you can see that on that bull case, our EMA lines are beginning to untangle. And that I would say it's tough, though, on this hour. I mean, you have to look more really at the bear case on the hour, right? The exiting volume was just massive exiting volume. We're way overbought. We got the momentum just slowing down here. So, that makes sense because we see that we're beginning to put on this handle here. Now, the question really is becoming, as we sort through this, is this handle going to hold? Is it going to get bullish and go up? Is it going to fall through? Where exactly are we going next? Let's take a look at the 2 hour because this is important. Your 2 hour time frame, very important here. The best bull case here for the 2 hour is that we have that bullish divergence confirmed, and boy did it confirm. That 20 really took off and crossed that 50, so that's something to keep an eye on. We're definitely curling up more there, and we are supported by the 20 and the 50. So, the other interesting thing here on the 2 hour that we should really pay attention to is that we're not only supported by the 20 and 50, we're supported by the 100 as well, right? So we're firmly supported there, and the bullish divergence is confirmed. Now, on the bear case, I would say that we're obviously overbought, and we're moving to cool down, just like our other time frames. Momentum is beginning to slow down. We've got really just massive, again, exiting volume. This exiting volume is over 3 million, and that's essentially equivalent to what we had brought in all day. So that is very bearish on that 2 hour time frame when it comes to volume. So that's something to keep in mind. We have this confirmation here, but, kind of a bear case there for the volume. And you've got to remember there's other times like here, back when we were at the 402, roughly 403.15, 403.19, somewhere in there, where we've had previous bullish divergences confirmed on the 2 hour. That's not the only one. But then they fail and they are bull fakeouts. Now, granted, this one is much, much stronger than some of the other ones we've seen. And, that could really be anticipated because what happened? Well, we broke up out of this huge descending wedge we've been inside of. We broke out of that. We cleared it. And, when you break out of a descending wedge, that becomes very bullish. Now, of course, we also have broken out of our ascending wedge today, which is kind of, those usually break bearish. Now, we have yet to see if that's going to hold true because we have to see what this handle is going to do and just how far off are we going to cool down and could we ride back up? We'll see. Let's get the rest of our information here. Let's take a look at the 4 hour. Now, on the 4 hour, you do have the 20 curling up. It is supported by the 20 and the 50. The price is anyway, and we've got increasing volume coming in here on the 4 hour, and that's also an increasing price. I mean, just generally speaking, when you look at that, so that's very bullish, and that paints a different picture from the 2 hour. And you got to remember, this 4 hour is a higher time frame. It's carrying a little bit more weight here, so it's definitely something to pay attention to on the 4 hour. The bear case here is that we're below the 100-day, and we're really approaching overbought. We're not quite there yet. We have room to go up, so keep that in mind on the 4 hour. Now, let's check the daily, and maybe that'll offer us some more information here where we can really kind of bite into this and decide where we are going to be going. And on the daily, you can see here that, now this is interesting, and I'll tell you why. I'm seeing some changes here on the daily aftermarket already. Now, you can see we're actually, volume for the day is lower than the 2 previous days. That is essentially increasing price. From the past 2 days, we've had increasing price, and that is now decreasing volume. But there has been a significant amount of volume that has come in, perhaps aftermarket. Maybe I'm remembering incorrectly. I might be, because we're on that handle, so that doesn't make a lot of sense. So, yeah, I think, but still, the fact remains is that, this isn't equivalent. This is definitely a divergence that's being built in there, and it's something you have to pay attention to because it is on the daily time frame. It's not that couldn't change tomorrow and suddenly we get an increase and we head even more bullish. But right now that we have to take this into consideration as it is what it is in conjunction with all the other time frames that we are seeing. And when I see that massive exiting volume on the hour, when I see that on the 2 hour, when I see that on even the 30-minute, we see most of the volume that came in on this spike up today just evaporate. That is concerning for a further bull case, right? So let's just get down to it. I'm going to tell you the bull case, the bear case, and what my opinion is. And then I'd invite you to stick around after that because I'm going to give a broad view that is incredibly interesting about where this market is going. We're going to revisit some Fibonacci ideas and comparatively to the 2008 crash, the crash with COVID, and then how that correlates with what's about to happen now a little bit longer term as we're moving into the coming weeks. So I think your best bull case for tomorrow, if I can get it to register, yeah. I think your best bull case for tomorrow looks something like this, where we flag out and cool where we are right now on this handle at essentially 404.79. You could back test a little bit further, but you would not want to break too much lower. You don't want to break the structure of that handle. And then we begin to work our way up to roughly the 409.35, and we would basically probably flag out in there and test that area, maybe even all the way up to 413.40, but we wouldn't break that. I think we would just flag. That would become a new accumulation zone. And that's what I would be thinking for your best bull case tomorrow. That is entirely possible. It is entirely possible that could happen. That daily volume is so much less. But again, on the 30-minute, the hour, the 2 hour, this exiting for today, it doesn't really inspire a lot of confidence for what's to come tomorrow. Your best bear case is going to be essentially us coming all the way back down to about 395.34 and maybe even breaking down lower into that accumulation zone. And, you know, how you do that? Well, you fall back into that ascending wedge because you had that breakout of there. And typically the breakouts there lead to bearishness, not bullishness. And then I think you then fall through that ascending wedge because you just, you know, you're way overextended and there has to be a correction for that. So that would take us back all the way down to this accumulation zone. I think that is a much higher probability than us going all the way to 409.35 tomorrow. I think tomorrow you could have a gap up to roughly about 408.31, or you could ride it there tomorrow to close that gap on the 30-minute over here. But I think ultimately for that bear case, you know, I think ultimately you're going to roll over is my point. So tomorrow we are going to roll over. The question is, do we roll over to the accumulation zone that I'm speaking about there at the 395.34 on the bear case, or even further? Then I would just revisit my case from yesterday. Remember yesterday I told you that I thought we were going to end up, and I told you this doesn't have to play out tomorrow. We could have ups, we could have downs, and I expected that we would. And I was especially warning you about the bull case and the up. That's why I said I think we're going to go up and sideways, generally speaking. And I still believe that's true, except in this case now we have to cool off. So I think you would probably see part of this bear case pull out, but then I think we probably begin to, let me see, where is that? Here we go. I think that we start to flag in this area and we go into some more accumulation, which is essentially between the 398.40 and the roughly 404.52. All right, so, or 398.25. It's tough to get a beat on exactly where that is. I'm thinking what I have highlighted now, it's essentially like I'm calling 402.03 and 398.40, but really I'm trying to line that up on these two lines. I'll put the chart in the description box so you can check that out and get it, and you'll have the information. But I think that's where we're going based on what we're seeing here. I think we're definitely going to have a rollover tomorrow. We could have a gap up to fill that space tomorrow and then roll over. And this gets into the bigger picture. This is what I want to talk about right now. Number one, okay, if you go out to the higher time frames, in fact, let me just do that. Let me go to the 4 hour. If we take a look at the 4 hour here, this orange line isn't like a precise move. I'm not saying that's the angle and that's the momentum of price and the velocity that we're going to take. I'm not saying that at all. But if we do a measured move off of bullish divergence and, you know, we have a cool down maybe to this point that I'm talking about tomorrow, but then after that cool down, we start to become bullish again and that divergence continues and we start to work it up back into the 2 hour and then into the 4 hour time frame and higher, I think you've got a measured move that would be consistent with completing a very large cup here at roughly 426.62, although it could go a little higher and actually complete that cup at 428.59. Now that's long term. And then that takes us into another idea. I want to really accentuate this Fibonacci circle right now for us so we can see that really well. And I'm going to go ahead and increase that so it's obvious. I'm going to take this one that we're on right now, and I'm going to roll that to the back so it's not so much in our way right now. Okay, and you can see how useful those are. We rode that Fibonacci line up right on a W reversal, right on all of the other indicators showed us that was likely going to play out tomorrow, or today rather, and that's what happened. But this pink Fibonacci circle goes all the way back to the COVID era. All right, this goes back to our COVID correction, and you can see how beautifully this uses support, resistance, support, resistance, right? Support. You can see how it falls through, right? Look at how it falls through here, and it rides it down as resistance, and you really just see that over and over again on this. And again, this chart will be in the description box below. You can see how we wrote it down there. We're approaching this again, right? And I think if we continue on this cooling here and we continue on a bullish uptrend to actually meet a point that would be consistent with a measured move with the way the market is moving, like if we ignore this little hump here and we say 1, 2, and then we're looking for 3, right? Well, this would be the measured move up before that third fall, right? And I'm really thinking this is a place we could return to. And when we hit this fib line, then we see a massive dump back down to levels that we were at before, right? And then further, okay, further corrective territory. And this would lead us into June, right? June 16th. I haven't got the calendar up right now. Maybe you can tell me in the comments section when the Fed is supposed to actually hike those rates again. But I believe it's sometime in June, so it'd be interesting if that's correlative, okay? There might be a correlation there that we have to look into. So that's interesting. And that really gives us an idea of where we could be going, broadly speaking, and it's something to keep an eye on. Now, one other thing I want to show you is, this is fascinating too. This is just extra information. I'm going to leave this pink one up because that's important because you can see how it interacts. But I've got a black fib circle on here too. And I want to really bring that out now. This one goes all the way back to 2008. Okay, and I want to show you how useful these are, right? And you can say the Market Wolf showed you this 3 years before we had another major correction, but I think it may have been moved. It may have been accidentally moved because it doesn't look like it's lining up as well as it was before. It may have been moved. Yeah, I think it was, as a matter of fact. I wonder what happened. I wonder if I accidentally... Oh. Let me go to the... We'll see a little clearer, I think, on the 2-hour time frame. I believe I lined this up on the 2-hour, no, it may have been the daily. Yeah, let me go to the daily. That's what it was. I lined it up on the daily. You can, depending on what time frame you line these up in, you can see them a little better or a little worse. So, yeah, when you're looking at the daily time frame, you can see when we cross the fib line, right? That's what it was. When we cross this black fib line, we have a break, major break there. We cross this fib line, and then also this one, oddly enough, and there's a break there. Break again on this black fib line, also the pink one there, a break. Here you see a slight breakdown. I am thinking something got moved a little bit, but because earlier this was highly correlative. But in any case, So you can see how far we are out from actually potentially crossing this fib line. But what are we looking at? Like some crazy date here, depending on like if you were to go up and actually make higher highs at a later date, you might get there sooner, right? Like in 2023, or we may not see these levels until, I don't know, maybe, it's still 2023, right? But if you were to hit that, you could see a breakdown event there. So that's interesting. That's why these fib circles are so useful. That one, of course, is a little further out there, not something we need to be concerned about right now, but I just find the Fibonacci sequence completely fascinating. I may do a whole video on it eventually. I do have it included in my next teaching video when it comes to how to use these fib circles. But in any case, that's your best bear case. That's your best bull case. Keep everything in mind that I spoke about here. Think about that long-term possibility, too, of a bear bounce all the way up here, and then, a third leg down. Taking us potentially down to those levels we were at back in, way back when. Let's see. Yeah, I mean, that's the other thing I was looking at earlier was support. I was looking at these fib lines as support areas, but we'll get into that more later. You can see it's a support area for that breakdown right here in essentially back in the COVID breakdown, right? And so my thought there on that is I wonder if we have a breakdown here, if this fib line right here, the 1610, the pink one, becomes a support of some sort during a breakdown or just something consistently on the way down. I don't know. It'll be interesting to see. I may try and find another one that'll give us some more information for this gap here and for this gap here so we have something else to look at. But anyway, that's the best bear case. That's the best bull case. That's my opinion. Please hit that like button. Please subscribe. Please share. I encourage you to hit the like button. I didn't get so many likes last time, and that's rough because I'm really dependent on you all helping me move this channel forward so I can keep giving you excellent information on a daily basis. I have literally missed only one day the entire time, and that's because my internet was out. So, that's the best bear case, bull case. See you next time. Hit the like button. See you next time. Market Wolf. Peace out, y'all.